Welcome back to the deep dive. Today we are looking at a story that is honestly a textbook example of that old saying, life comes at you fast.
It really is. It's a perfect case study in how quickly the ground just shifts in the tech world.
If you rewind the clock just a little bit, let's go back to 2024. The landscape of artificial intelligence felt different. Do you remember this?
Oh, yeah.
OpenAI CEO Sam Altman was doing the interview rounds, and he famously called advertising a last resort for businesses. It was this
Yeah.
very, idealistic
Right.
stance.
The whole philosophy was that if the product is good enough, if the intelligence is truly revolutionary, you don't need to clutter it up with banner ads.
Yeah,
The purity of the product was the selling point.
exactly. It was all about the mission. Well, fast forward to today. It is January 24th, 2026, less than 2 years later. And guess what?
The last resort has arrived.
That last resort has officially arrived. OpenAI has announced they are going to start testing ads with U.S. users on their free or low-tier subscriptions.
Yep.
So the era of the pristine ad-free chatbot, at least for the non-paying public, it's coming to an end.
It's a massive pivot. And what's so fascinating here is that on the surface, it looks like just another tech company trying to squeeze a few extra dollars out of its users.
Right. You see a banner ad, you roll your eyes, you move on.
Exactly. But if we connect this to the bigger picture and really look at the documents we have today, this isn't really a story about advertising at all.
Okay, so if it's not about advertising, what is it about?
It's a story about physics. It's about the limitations of the U.S. power grid and about a bill that is so large, it's actually hard to wrap your head around.
A bill.
We are talking about a $1.4 trillion infrastructure wall that the industry is about to hit.
Trillion with a T.
Trillion with a T.
Okay, let's unpack this. Because I think a lot of people hearing this news that ChatGPT is going to have ads, their first reaction is probably going to be annoyance. But their second reaction is probably concern. So before we get into the trillion-dollar math and the physics of the power grid, let's just look at the specifics of this announcement. What exactly is changing for the average user?
Right.
Because nobody wants their chat window to turn into Times Square.
So based on the reports, OpenAI is testing this specifically with U.S. users who are on the free or low-cost tiers.
Mm-hmm.
If you are a power user, paying for the premium subscription, the Plus or Pro tiers,
Mm-hmm.
you likely won't see this yet.
So the paid experience remains a sanctuary for now.
For now, yeah.
And what do the ads look like? Are we talking about pop-ups in the middle of my essay? Or like video ads I have to watch before I get an answer?
No, nothing that intrusive, at least not yet. The key details here are meant to be reassuring. First, the ads will be clearly labeled.
Okay.
They aren't trying to trick you into clicking something, thinking it's part of the AI's answer. It sounds like it will be mostly sidebar placements or clearly marked inline suggestions.
That's good. But here's the big one, privacy. Because if I'm pouring my heart out to a chatbot or asking it for medical advice or drafting a sensitive email about my boss,
Right.
the last thing I want is for that data to be sold to a sneaker company.
Right, and OpenAI seems very aware of that optical nightmare. In the announcement, they've explicitly stated that they do not plan to sell user conversations to companies. That is a critical distinction to make.
Okay, can we dig into that distinction for a second? Because to the average person, it feels like the same thing. I see an ad, therefore you sold my data.
Sure. Think of it this way. Imagine a billboard on a busy highway. The billboard company sells that space to an advertiser because they know thousands of cars drive by every day.
Right.
They're monetizing the traffic, but they aren't recording the conversations happening inside the cars and selling those transcripts to the billboard advertiser.
Okay, that makes sense.
OpenAI is essentially saying, we have massive traffic here, we have eyeballs, you can buy a slot to be seen. But they're claiming they aren't handing over the transcript of your therapy session or your coding problem to the advertiser.
That is a relief. But there was another point in the source material about driving conversations. What does that mean?
This is crucial for trust. They stated that advertisements will not drive the conversations, meaning the AI isn't going to unnaturally steer you toward a product.
Give me an example of what driving would look like.
Well, imagine you ask the AI, what is the best way to rehydrate after a workout? If the conversation was being driven by ads, the AI might be programmed to say, the only way to hydrate is by drinking a crisp, refreshing Gatorade.
Right. Hydration is a myth. Just buy Brondo.
Exactly. They're promising to avoid that. The AI's logic and its reasoning are supposed to remain neutral. The ad sits next to the answer, it doesn't become the answer.
Okay, so the user experience might get a little more cluttered, but the core product remains honest.
That's the prompt.
But even with those assurances, this move raises a really important question. Why now? Is this a desperate cry for help from a struggling company? Usually when a company pivots to ads after saying they wouldn't, it's because they aren't making enough money, right? The user growth is stalled or they are burning cash too fast. Is OpenAI in trouble?
Well, if you look at the stats we have,
Yeah.
calling it desperation seems, well, it seems completely wrong. In fact, the numbers are kind of mind-blowing.
How so?
ChatGPT is still considered the fastest growing consumer app of all time.
Yeah.
It hasn't slowed down.
Still holding that title.
Absolutely. As of December, so just last month, they hit 900 million weekly active users.
900 million. That is nearly 1 billion people using this thing every single week. That's Facebook scale.
It's a staggering scale.
Yeah.
And it's not just users, it's revenue. According to a blog post from their CFO, Sarah Fryer, OpenAI hit an annualized revenue run rate of over $20 billion in 2025.
Okay, wait. Let me just pause you there. I need to process that number.
Sure.
They have nearly 1 billion users. They are making $20 billion a year. That is an enormous amount of money.
It is.
So here's where it gets really interesting, or maybe confusing for me. If you are making $20 billion a year and you are the king of the hill, why do you need to sell ads? Why risk annoying your user base if you are already printing money?
That is the paradox, isn't it? It
Yeah.
just defies the normal logic of business. Usually $20 billion is mission accomplished.
Right.
But to understand this, you have to look away from the money in column and look at the money out column,
The spending.
the spending. But specifically, the future spending. It's not about how much they're making today. It's about how much they intend to spend tomorrow. The cost reality here is unlike anything we have seen in software history.
Is this where that $1 trillion figure comes in?
Precisely. Sam Altman publicly stated that OpenAI has over $1.4 trillion in outstanding data center commitments over the next 8 years.
1.4 trillion. That is the GDP of a mid-sized country. That's Spain. That's Indonesia. They're spending an entire country's GDP on what? What could possibly cost that much?
Well, in a way, they're building a digital space elevator.
A space elevator.
They're hitting an infrastructure wall. You have to remember, AI isn't just code floating in the cloud. We use terms like the cloud or virtual, and it makes us think these things are weightless.
Like magic.
Right. But the cloud is a physical place. It's massive industrial warehouses full of servers, GPUs, cooling systems, and backup generators. It's steel, concrete, copper, and fiber optics.
So this isn't just about hiring more coders. This is construction.
It is heavy industrial construction, and it's hitting physical limitations. The sources point out something very concerning. The U.S. power grid.
The grid.
Yes. Artificial intelligence consumes a massive amount of power,
Yeah.
far more than traditional computing. When you do a Google search, it takes a tiny blip of energy. When you ask ChatGPT to write a poem or debug code, the processor has to think. That generates heat. That heat needs to be cooled.
I read somewhere that an AI query uses like 10 times the electricity of a standard search.
And some estimates say it's even higher, especially for complex models. Now multiply that by 900 million users. The report notes that the U.S. power grid is in major need of an update. It's described as being close to running out of capacity without huge upgrades.
So let me get this straight. When I type a prompt into ChatGPT, I'm not just using software. I am essentially pulling energy from a grid that is already strained.
Exactly. You are burning coal or natural gas or using up nuclear capacity.
Yeah.
And if ChatGPT continues to grow, which it clearly is, they need more data centers. But you can't just plug a massive AI data center into a wall outlet.
You need your own power plant.
Basically, you need new substations, you need high-voltage transmission lines, you need water rights for the cooling systems. We are talking about projects that take years, sometimes decades, to permit and build.
So when Altman talks about $1.4 trillion, he's talking about rewiring the world to accommodate this intelligence.
In many ways, yes. He's talking about the physical cost of
Yeah.
intelligence.
Yeah.
So when you see that ad for, say, a budgeting app or a car insurance company pop up in your sidebar, don't think of it as profit-taking. Think of it as funding a construction project that rivals the interstate highway system.
That puts it in a totally different perspective. The ad isn't for the shareholders. The ad is to pay the electric bill.
Effectively, yes.
Yeah.
And that brings us to the financial forecast. Because even with $20 billion in revenue, when you have a $1.4 trillion commitment, you need every single revenue stream you can get. You can't leave money on the table.
So is the ad business actually going to make a dent in that? I mean, $1.4 trillion is a deep hole.
The analysts think so. Mark Mahaney from Evercore ISI, he's a pretty respected voice in this space. He has analyzed this pivot. He predicts that this new ad business alone could surpass $25 billion in revenue by 2030.
Just the ads.
Just the ads.
So that effectively doubles their current revenue. They make $20 million now from subscriptions, and they could add another $25 billion from ads.
It creates a massive new pillar for the company. It turns them from a software subscription service into a media giant almost overnight.
Wow.
And that is significant. But there's another piece of the financial puzzle floating around in the rumors. The Wall Street Journal reported on a potential future IPO.
The big public offering, taking the company to the stock market.
The big one. And the target raise they're talking about, $100 billion.
$100 billion IPO? That would be historic. That would be the biggest IPO ever, wouldn't it?
It would be absolutely huge. But, and there's always a but, we have to temper this excitement with a bit of risk assessment.
What's the catch? They have the users, they have the tech, they have the ad plan.
The catch is that spending money doesn't guarantee you make money. Just because OpenAI spends trillions building these data centers, it doesn't guarantee the returns will be there.
Because there's competition, right? They aren't the only game in town anymore.
Far from it.
Yeah.
You have Google, you have Anthropic, you have Meta, you have Amazon. Everyone is racing to build the same thing. They're all pouring concrete. They're all buying GPUs.
So it's an arms race.
It is.
Right.
And investors need to understand that this build-out is necessary just to play the game, but the payoff isn't guaranteed. It is a high-stakes poker game where the buy-in is $1 trillion.
And if you lose?
If you build a data center, but your model isn't the smartest one, or users switch to a competitor, you're left with a very expensive warehouse full of depreciating chips.
That is a terrifying thought for a CFO. You spend the GDP of Spain, and then people decide they like the other chatbot better.
Exactly. It's not for the faint of heart.
It is wild to think about. You know, usually when we talk about tech companies, we talk about scaling software because it's cheap. You write the code once and you sell it 1,000,000 times.
Zero marginal cost. That's the dream of software.
Exactly. But this sounds like the opposite. This sounds like old school industrial scaling.
Yeah.
Steel, concrete, electricity. It feels more like building railroads than building an app.
That is a great observation. And that is actually the core philosophy behind this move. CFO Sarah Fryer laid this out in a blog post, and I think it's really important to understand her logic. She's trying to explain why this massive spend is necessary.
What did she say? How does she justify it?
She described a cycle, a flywheel effect, and it breaks down into 4 steps.
Walk us through it.
Okay, step 1 is infrastructure. That's the data centers, the power, the chips. Infrastructure expands what we can deliver. You can't run a smart model on a weak computer.
Okay. Step 1, build the factory.
Step 2 is innovation. Because you have the massive infrastructure, you can train smarter, larger models. You get better reasoning, better coding abilities, better creative tools. Innovation expands what intelligence can do.
Step 2, make the product better.
Step 3 is adoption. Because the intelligence is so useful, more people use it. That's how you get to 900 million users. Adoption expands who can use it.
Step 3, everyone signs up.
And finally, step 4, revenue. This is where the ads come in. You monetize that massive adoption.
And what happens to that revenue?
It funds the next leap. It goes right back into step 1, infrastructure.
So the ads are the fuel.
The ads are the fuel that spins the wheel. Fryer wrote, "This is how intelligence scales and becomes a foundation for the global economy."
A foundation for the global economy. That's a heavy statement. That sounds less like a product and more like a utility.
I think that is exactly how they view it. They view AI not just as a cool app, but as a utility, like electricity or water or the internet itself.
Right.
And utilities require massive physical infrastructure. You can't have electricity without power plants. You can't have the internet without fiber optic cables under the ocean.
So in their view, introducing ads isn't selling out. It's the only way to keep the lights on, literally and metaphorically, while they build this utility for the world.
That is the argument. If you want the intelligence to keep getting smarter, if you want GPT-5, GPT-6, and beyond, and you want it to be available to billions of people, not just a few wealthy corporations, someone has to pay for the physics of it.
It really changes how you look at a simple pivot to advertising. It's not just, oh, they want more profit. It's, oh, they need to rebuild the power grid to make this work.
Right. And it highlights the constraints we're facing. We're used to digital things feeling infinite. You can copy a file 1,000,000 times and it doesn't weigh anything.
Yeah.
But AI is proving that digital things have very real, finite physical costs. Water, energy, land.
It's a reality check.
It is. It's the moment where the virtual world crashes into the physical world.
So what does this all mean for us, the users? We are sitting here in 2026. We have watched this company go from a nonprofit research lab to a product with a last resort stance on ads to now a media giant serving ads to fund a trillion-dollar expansion.
I think it means the honeymoon phase of magic AI is over. The magic trick era is done. We are now entering the industrial phase.
The industrial phase. That sounds serious.
It is serious. The magic trick was amazing, but it was expensive. And now the bill is coming due. We are moving from the wow moment to the how do we pay for this moment.
You know, it makes me think about the trade-offs we make for convenience. We get this incredible tool. I mean, I use it every day. You use it every day. It answers our questions. It writes our emails. It helps us code. It has become a second brain for a lot of us.
It's indispensable for many people now. Productivity has just skyrocketed because of it.
But the hidden cost isn't just the $20 a month for the premium subscription. It never was. The cost is a massive reconfiguration of our energy grid. It's the water used in the desert to cool the servers. And now it's an advertising model that we thought we might escape.
That's the question I'd leave listeners with. We are getting free access to the smartest AI in history. But is the convenience of that AI worth the physical footprint and the commercial footprint it requires?
Yeah. Is it worth the water, the power, and the ads?
It's a transaction. We are trading our attention and our natural resources for intelligence.
Yeah.
We just didn't see the full price tag until now.
It's something to think about the next time you see a sidebar ad while asking ChatGPT to debug your code or write a birthday poem. You aren't just looking at an ad for car insurance. You're looking at a tiny contribution to a $1 trillion electric bill.
Exactly. You are feeding the machine.
Well, that is a wrap for this deep dive. It's a lot to process, but hopefully it explains why your screen might look a little different soon. As always, thank you for listening.
Thanks for having me.
We hope this gave you a new perspective on those headlines you're seeing. We'll see you next time. Keep diving deep.